I am a degenerate, and we'll talk about that here in a moment. Before we get going, don't forget to check out our store. The link is in the description as well as on the channel page. The Trade Cave store is open. We've got a couple of different t-shirts out here for you to choose from. I'm actually wearing one right now. I've been wearing them quite a lot. I love Sir Doge, Lord of Maximum Coinage. That's one of my favorite shirts. Then I also wear the Trade Cave logo t-shirt around right now. In fact, I'm the only one wearing them around right now. So if you see it, then you've spotted me out in the wild. But anyways, go ahead and check out the Trade Cave store. It is available now. We're going to look at Bitcoin, Ethereum, Solana, Dogecoin. I also want to talk a little bit about Adobe here at the end of the video, because again, that's one of the ways that I was a degenerate just in this last week. But first of all, let's talk about Bitcoin. Bitcoin right now hanging out just under $70,000. It went up, tried to take out 72, failed, came down to the 20-day moving average. It's bouncing off of it, which is a good sign. It needs to get back over the 5, which is coincidentally just over $70,000. We get over the 5, I think we run for $72,000. Now, the thing that people were kind of upset about going into the weekend was here, this Friday candle. So inflows on the ETFs were good. They were positive, and they were decently sized as well. But Friday saw a big drop regardless. Now, there was a lot of stop loss hunting. A lot of longs got liquidated, which caused that flash crash. And there has been calls of, market manipulation and things causing this candle right here on Friday. Just as something to be aware of. I wasn't too concerned about it. It came right into the 20 and it started going up. And the thing I did that was degenerate at this moment was inside of this candle here on Friday near the bottom, I went to BITX. You remember BITX? I was talking about that on Friday's video. Basically, it's just a Bitcoin 2x ticker that offers options. So what I did was I went in near the bottom of this candle. I didn't catch the absolute bottom, but near the bottom here, when it bounced off of the 50, you can see it came down, touched the 50, started going up again. When it did that, I went in. Let's dig in a little deeper here. I went in, down here near the bottom before these two blue ones. I went in and bought a option of, I believe it was for 50. So I bought a $50 call option for September. So I gave myself till the end of summer and going into fall in order for price to come back up towards the high 40s, maybe even come back to this peak up here with about 49, which would result in a significant amount of money for me on this call option. I did just buy one. This is a gamble, right? This one's a gamble. I am prepared for this to go to zero. I don't think it will, given the seasonality, given the way that Bitcoin is moving. I don't think that it will, but I am prepared for that to happen. And I bought it all the way out until September, right? So all the way out till here, September 20th. That's when it expires. Now, if it doesn't make a move up to the higher 40s sometime around the first week of August, that is when I'm out of this thing. So let's say August 12th, right? August 12th, if we aren't at least, let me get my thing here. If it is not at least back up to, let's say, 48 by then, by this cross section right here, it's not back up to 48 by then I'm going to be closing it for a loss because I don't need to let it go to zero if I don't want to. So I'm prepared for it to do so, but if it's not at least back up to here by this date, I'll just close it and take the loss. So that was a degenerate gamble that I'm doing right now on the BitX ticker, which is a Bitcoin related ticker that gives you 2x leverage on Bitcoin. Plus I did options, so it's a lever on a lever, which makes it extremely dangerous. Now there's a couple of reasons I did that. Now I did it because one, it bounced off the 20 on the Bitcoin chart, and Bitcoin is up from that. In fact, it is up from that down spot right now. It's actually up 1.85%, and that's a 2x, so it's up over 3% on that in the morning on Monday, as long as it holds up where it currently is. Here we've got the Bitcoin monthly average returns. You can see here, so the average returns for last month, May, was 7.94%. We actually ended up getting 11%. For June, the average move is about 0.5% up so far. We're up 3% in June, so we could maybe come down, 2.5% or keep going up higher. You can see the highest we've ever gotten in June was 27% in 2016, which was a halving year, by the way. Last year it was up 12% in June. July, the average move is 7.98%. And in August, the average move is about plus 2%. And then you get into September where it's minus 4%, which is honestly often the worst month of the year just for about everything. So I'm looking at three potential positive months going forward on this BITX call that I've done. That's another reason that I got into this thing. We're post-halving. We are looking bullish. The next 3 months on average are positive. I am trying to get out of it for the end of July. That's my expectation for that. But this is a fun thing. This is on CoinGlass. You can come in here and look at different performances for Bitcoin during different months. And this is also why I expect a summer rally for the miners sometime near the end of June. We might start seeing this thing move up in preparation for July. And if you remember, July is often the best months of the year for a lot of securities. Now, Bitcoin now is it is a little bit skewed towards like November. You can see here November, end of October, because that's usually when it takes off after a halving. Like you'll see it just launch off on after halving years, like 2017. This year after having 47% in October, 53% in November. 2020, 27% in October, 42% in November, 2021, 40% almost in October. That it's skewed in those ways on that for it. Few other things I want to look at for Bitcoin. So in case we're ever concerned about it being a Bitcoin top, you can look at the stock to flow model. This is another one of those models similar to something like the Pi cycle top, where it gives you nice color coded things to let you know where in the cycle we currently are. Now, like the darker color down here, like blue, dark blue, purple, that is going to be during the bear market, during the crypto winter. Red is after the halving, and then it gets brighter and brighter and brighter as it gets higher, and it turns into a lime green when it has detected a top. So sometime when we start seeing this thing turn into let me just do that. When we start seeing this thing turn into a yellow color, that's when we're going to be looking for, okay, the top's going to be coming pretty soon. And you see it start turning green, like a pale orange yellow color. That's when I'd be looking for it to really start reverse and come back down again. Now, you can see last time with the double tops, it only got yellow and then came back down. That would have been super, super scary. And then it came back and turned green and got a little bit higher later on in the year or the next year. So that is something that we are looking at right now. We're just watching this right now. It's red. I want to see it turn yellow. And when it turns yellow, that's when I'll start looking for peaks on this market. Now, we also have the Pi cycle top that I like to watch. Now, we can put this on our trading view chart as well. Right now, yeah, we're nowhere near it happening right now. What's the other one that I like to look at? It was not stock to flow, it was the rainbow chart. Let me see if it's in here. I found the rainbow chart. Yeah, so on the rainbow chart, you start seeing it get up into like the yellow and the red. That's when we're expecting like it to really start reverse. Now, last time so if you notice here on the rainbow chart, this is an important thing to pay attention to on the rainbow chart. You can see the first cycle, it came way beyond it and then came back down. On the second cycle, it came just outside of it and then came back down. The third cycle in 2017, 2018, it hit the red, didn't even get outside of the rainbow and then came back down. And then 2020, 2021, it barely got to orange and came back down. So this time we're expecting it to maybe get to like the top of yellow, which would be about around, let's see, we want to go into the end of the year. We would be looking at, let me zoom in. End of the year, we're looking at, yeah, about $190,000 is about a peak we'd be looking for on this time frame based on it coming to the top of the yellow. Yeah, about $200,000 might be like the peak we'd be looking at this cycle on this one based on the rainbow chart. Now, it could go beyond that because if we're aware that the 2020 cycle was a manipulated cycle. So there's that. All right, that's it for Bitcoin. Let's take a look at Ethereum. So Ethereum is now coming down to the bottom of this flagging area here. We've crossed beneath the 5 and the 20. We do have a red arrow pointing down here. RSI did come beneath the 50. It looks like it's going to tap the 50 from beneath and possibly continue back down further. I do think that we will very likely on Ethereum come down to touch the 50-day moving average before we blast off for the ETFs, or soon after the ETFs come out, we get the sell the news where it comes down to the 50. And right now the 50 is at $3,360. Now it's going to come a little bit higher before we get there, but this right here, what we're looking at right now, that looks like a bear flag on Ethereum, and I am expecting Ethereum to come down at least down to about $34 to $3,500 on this thing. Now, the full move would be down to 3360, but I'm not, I'm not convinced it's going to get all the way down there. But this is a bear flag that we're looking at right now. Of course, tomorrow this thing could absolutely turn around and launch back up because that's the way crypto is. But the technicals are saying right now, it looks like Ethereum wants to keep going down a little bit further. RSI is in the right place for a bearish move. The volume, while flattening a little bit, could easily charge back up again like it's done here in the past. You can see it goes way further down than this on other occasions. So it could flatten out for a bit and then go further down. That has happened before. And of course, this does look like a bit of a bear flag, especially printing this red arrow down here after getting a green dot coming through the SMAs. It probably wants to come back down to check this thing. Now we could go up to the 5-day first at 3,700 before coming down and fulfilling that bear flag scenario, and we might stop at 3582 again, just like we did back here, because that is now going to be at least a point of support there now. But if we get past the bottom of the wick here at 3580 something, let me just draw it, 35 right there. Once we get below that, I'd be looking for a larger move further down, somewhere near the 50 moving average on Ethereum. And that's just how it is going to shake out on Ethereum right now. And as if you're in some of these other plays like Solana, you experience that as well. So it did dip below my $60 level, but it never closed down there. Notice how, well, it closed down there yesterday, and then now today it's right back up above it. As long as it's fighting this level, I'm going to say that that 160 is likely to hold. We came right into the 50-day moving average, like I said it's going to do with Ethereum, and then it started bouncing off of the 50-day moving average. As long as we don't close beneath the 50-day moving average, which is at $156.57, as long as we don't close beneath that on Solana, we're likely to continue on up again, or at least flag in this area for a while before Solana makes a decision. Now, the 5 days up here at 165 and the 20 days up here at 168. We do need to get back above those to have a chance at coming back at 189 and then 210. So we do need to do that. Now, I'm not super concerned. Not too bad. As long as we make a low that is above 118, we are going to be compressing price. Now, we are in a downward channel, but we are above this channel, and it's okay if we come back to tap the top of this channel here at 148 and then continue on our merry way, as long as we don't go back into this descending channel, because if we go back into this big descending channel here, we're likely to come back down to the 200, which currently is at 126, but by the time we meet it, it might be somewhere closer to like 137. So that is something to take into consideration. And then this little swoop up here, and we came back down, we broke this low. So that's not good. We do need to close above 161, and we need to get up to the 5-day. Otherwise, we could be in trouble on Solana in terms of coming down towards the, the mid 100s to low 100s on this thing. Now, I don't see us really getting any lower than about 140 on here. There's tons of support from this inverse head and shoulders back here. It is possible we could slice through it if something bad happens, but I am not looking at it really getting any lower than that. And honestly, I'm would be a buyer here. I have been a buyer at the 160 level every time it's come down to it. I've been a buyer there, and I would be a buyer at 140 because honestly, I think this cycle will easily take Solana up and above the their all-time high at 260. I do expect to see that sometime at the end of this year and going into next year. And of course, none of this is financial advice or a suggestion to buy, sell, or hold any asset whatsoever. So let's take a look at the fibs real quick on Solana, see where we're at. All right, so the fact that we closed beneath that is not good. And you can see the midline for the fib is at 121 right now, and it's slowly curling up. And by the time we get there, it might be somewhere closer to like 128, 130. I don't know if we'll come all the way down to that. We might touch the 238, 236. Let's see, which one is it? Yeah, there it is. Boom. Yeah, we might come down to the 236 because we stopped there multiple times before on this inverse head and shoulders. Once, twice. We might come down to it to a third time. Hopefully we don't crack it on that third time. But that is at about 148, that 236. It's about 148, which is right in the middle of all this support here. So I would expect it to have a bounce there. We do need to get above. This is the 386 or 38 something. 382. I always get that one wrong. It's the 382 is at 165. We do need to get above that to have a chance at the 618. All right. I know that's a lot of numbers to throw at you. It's just the fib Bollinger Bands. I've been using these a lot lately. In fact, I've been using these for a strategy for day trading that I think I'd like to bring to the channel at some point in the near future. Not yet. I don't think it's ready yet, but that's something to look forward to. All right. So that's Solana. One thing I do like here that I find interesting. Okay, so Solana. This is Solana exposure that you can buy on your regular brokerage. It's called OSOL. It does trade at a bit of a premium to Solana. You can see here it's trading for $17, which would represent like a 170 valued Solana. So it's about a $10 premium you'd be paying for it, but you don't need to deal with crypto brokerages or like self-custody or any of that nonsense if you were to go into it like this. And I think I might buy some of this specifically because there is a speculation that Solana will likely get its own ETF here in the near future. So that is pretty exciting. And I think that this would go significantly higher. You can see here it traded when it was at 210. It was trading at it's not so bad. It was 21.45. So that'd have been about 213, 215. So it was trading at like $5 premium. It's always going to trade at a bit of a premium to Solana, and the I believe the fee for it is a bit high. It's like close to 2%. But of course, you pay 2% whenever you sell crypto on pretty much any platform. There's a very few platforms you're not paying that for. And also doing taxes from crypto brokerages is a pain. Trust me, it's a pain. It's annoying. It's it's super annoying. I hate it. Any way I can avoid doing taxes by using any of the forms that crypto brokerages provide me, I'm happy to pay a little bit extra to not do that anymore. I'm so sick of doing that. I think this might be the last cycle I trade that way because it's annoying, and they make it annoying, and they give you just the worst spreadsheets, and it's irritating. Okay, that's all I've got to say about that. But this is OSOL, and I will be looking at OSOL here for the future to pick up my last few bits of Solana that I want to get. I think, where am I? I'm at 46 right now. I want to round it out to about 50, maybe 55, equivalent to, in equivalent to 55 Solana here. So I do need about 9 more to get there. So I'm thinking about using this in my brokerage OSOL to get to that last 9 Solana, value of Solana that I want to get. And the fact that we're coming in on this like spaghetti of SMAs down here at like the $15, $16 level gets me pretty interested. I think we probably might come down to like 15 bucks on this thing, and I'll pick it up. Now remember, this is after a split. This did like a 10-to-1 split here because it was $170 just a couple weeks ago. So, and I looked at it and I was like, oh, $17. That's nice, easy access to some Solana there. I like that. Even if it comes at a premium, I'm not too upset about that, actually. So that's just something to take into consideration as a method of getting that Solana exposure without having to deal with like all the crypto brokerages and converting your money to crypto and moving it around brokerages and back and forth and all this nonsense. It's just an easier way to get to it. Something to pay attention to. Let's move on to Dogecoin. So Dogecoin, if you remember, we talked about Dogecoin on May 23rd. Okay, this was 2 weeks ago, but it was May 23rd that we were talking about it. And it was trading at 15 cents, 15.77 cents. And that was back here. May 23rd, it was 15.77 cents. So somewhere like there. All right. And we said, okay, this looks like an inverted head and shoulders, and this is the neckline. And if it gets above that, we're going to blast off. Now, it did come up to the neckline. It went from 15 cents, 0.77 to 17.46 cents. I did say it would be about 18 cents or so where it would likely go. So we got within a penny, not too bad. And then it failed at the neckline, and it came down. It came out of this ascending channel right here. So that's actually gone now. It came out of that. It's coming back down here. Now it went to the bottom of that shoulder and bounced. Now this could look a little bit like a bear flag. And if it gets below this white line here, it gets below this white line here, yes, it would be, and it would come down to the 200. That could happen. So if this is a bear flag, it'll come below this white line. As soon as it confirms below this white line here, then we're going to the 200. Now, there's a chance if it comes back up and above the 50, then we just have the 20 in front of us at 16 cents. And above that 16 cents, we're going back up to this neckline. And we'll test that again. Crypto likes to fake you out a bunch of times. But we are still in an ascending move here. We have not taken out the low. So we made a higher high, and then we made a higher low. So if we can get up above, honestly, 16.5 cents, and then start running for this 17-cent range, that would make us in a higher high again. And that would be a higher high, higher low pattern that could take us to the high, to the cycle highs at 22 cents. Now that does hinge on, us not getting any like really terrible catalyst taking us down on this thing for now. So if this gets below the white line, we're going to the 200, which is at about 12.4 cents. It gets above the orange line, we're going to go test the yellow line at 16 cents. We get above that, we're going to test the neckline, which is currently at about 18 cents. That's what Doge is doing. It could go either way right now, to be honest. Okay, the last way that I was a degenerate last week was on Adobe. So you remember I was saying wait for Adobe, like be patient, wait. We're just waiting for it to get out of this descending channel and start moving up. Well, something I noticed last Monday, honestly, it was on Monday, was that it came down and touched this mega trend line from the low lows of 2022. It came and tapped it and bounced. And when it bounced, I bought some call options. And these call options went really well. Now, this was dangerous. This was super dangerous because if price went beneath this orange line, it would have just absolutely cratered because there was nothing, absolutely nothing to hold us up below it. Like it would have, if it would have gone down to 418 very likely, and then very easily could have slipped all the way down to 381, which would have completely wiped me out. And these contracts, they are expensive. So this thing was dangerous. That's why I didn't bring it to the channel. So I'm like, oh, that's way too dangerous. That's way too sketchy. I can't in good conscience tell other people about this. Anyways, I played it to the upside. It was like maybe 500 bucks. I didn't play it all the way up to this white line. I played it just above the red line here, and then I got out, and that represented. So I went from about 448 up to about 460, and then I got out of those positions. Now I am still watching this thing because it is turning around. It is turning around. If the price comes back down, right? So if I see price come back down, test the 5 down here at about 456 and start to bounce, I'd be looking for it to make a move out of this descending channel here and potentially even come up to the 50-day at 477. That's what I would be looking for in this instance. Now, if we go to the fib line, yes. All right, so the fib lines, yeah, it would take us, it's still coming down. We closed above it. As soon as that was another way I used it too. I was looking at the fib lines. I don't think we'll come back and touch this. I think that we're likely to come back down to the 5. We'll hit the 5 and start using the 5 as support. If we start showing support from the 5-day moving average on Adobe, I would be looking for it to come up towards the 50, around 477. If it cuts above the 50, I'd be looking for it easily to come up to about 491, potentially even into the $500 range. But again, right now, I'm just watching it now. So it did the move. It came down to my big mega trend line. It bounced off of that, so I got in. And now I'm just waiting. I'm waiting for it to show me that it's going to use the 5 as support. Once I start noticing that it's using the 5 as support, I'm going to go in again, aiming for about $500 over the course of about 4 to 8 weeks. Let's say 4 to 8 weeks is about the time period I'd be looking for on that for Adobe. But anyways, that's all I've got for you today. Please like, comment, subscribe, share the video, check out the Etsy store, and have a profitable day.